and here we go. So I'm going to cover basically Japanese yen. Let me delete this layouts, and yeah, so let's start. So basically I'll start from the monthly, weekly, and then daily, and I will make sure what's going on right now on this pair, which is very bullish. And basically what happened, the monthly is basically it took liquidity, and what is the target? This one. And as you can see here, the marker didn't tap it, and now it's there, it's going there. I mean, here this is called basically engineering of liquidity. Liquidity has been engineered here. So let me delete this, and yeah, liquidity was engineered, but the structure remained bullish. So that's, it's normal, it's about market structure and things. Let me delete this and this. Okay, so took liquidity, and this is the monthly liquidity. Let me write down monthly liquidity. Okay, so the main target is there, so we are drawn there toward that direction. So let's drop to the weekly, and we will analyze the weekly from here. So we are bullish. So basically on the weekly, I will assume here a break of structure up. So let's drop to the weekly, and what I said basically was this was the break of structure breaker, and attacking what this because the final monthly and also the weekly, I presume. Let me draw for you guys. So yeah, we are bullish. Basically look at the market structure and where we are going toward this liquidity. And 1 second. So here the structure is bullish. So what do you want to see on the daily? Bullish break of structure. And 1 second. Okay, so here we took this liquidity. Look at that, how nicely we took this liquidity today. And if you look at my previous video about this pair, I was like here, and what I said on that video is that I want the price action above this break structure, above this line, to be bullish. But I also said that I'm very bullish about this pair because of the monthly and the weekly drawn. But on the daily time frame, basically I just want this line to be broken and then see some discount, and then tackle the buy side nicely. Then I'm very confident because I have that structure in mind. And another thing, you have to wait for premium to short. You have to wait for the, let me draw for you guys the 0.5. you have to wait for that. If you see some type of reaction, you could have shorted that till the external liquidity. But now, right now, look at the momentum, look at that. So if the price is not going here, where it's going? To the other end, basically to this buy side normal. That was the concept. And also today we had the news on this pair, which led to this expansion, which is, let me drop to the 1 minute chart. Let me add this session, which was this news at 11:25, I guess. I don't remember right now, but it was 35. So this was the news. What happened here? We took this sell side liquidity, and the expansion was totally up. It's totally up. Look at that. Today expansion is totally up, which was led by this news. And tomorrow we have also, I think, CPI. I don't remember, let me check. FOMC, yeah, CPI for GBP and FOMC. Basically I'm interested tomorrow for the PM session. Let's see what's gonna happen. I like that. I like the news. I mean, they lead to the expansion and I like that. Okay, so let me drop to the daily. Cool, so we are back bullish and we're gonna tackle this. We're gonna take this. And if you heard about the GB interest rate, basically they officially raised from minus 0.1%. Let me percent to 0%, 0% basically. So this is also, I mean, this is also a plus point for the USD/JPY to go up. And this was the whole, what I wrote is fundamentally, but I don't see the I never saw fundamentals about the trade, about these charts. I always trade the charts, which is the best you can do. So yeah, this pair was very nice, and it's very volatile, this pair, and I like that. I like this pair. So yeah, which pair will I cover now? Will I cover next? So basically I have in mind USD. Did nothing. I want this also to be taken. So I'll cover that, yeah. GBP USD on the next video, so stay tuned and watch out for my next video. Until then, let's wrap it up.